Hi guys, it's Stock Curry, and I've got to tell you, I really need to make some more money in the stock market. I don't know if you have kids, but boy, kids can be expensive. My boys have gotten into the very expensive habit of taking money, ripping it up, and feeding it to the dogs. Really? Oh my gosh, kids are so expensive these days. Anyway, let's talk about the stock market a little bit because we have some really big catalysts coming up this week. The first one is on Thursday, the Consumer Price Index is coming out. Now, the CPI, if you remember back in April, was 4.2% year over year. It was much higher than anybody expected. And it really threw a lot of people into panic. It caused high growth stocks to tank. This month, we are getting the May CPI numbers, and the expectations is that they're going to come in around 4.6, so even higher than April. Now, the question is, do they come in higher, do they come in lower? If the inflation comes in higher than that, you could expect your high growth stocks to possibly go down quite a bit. You might want to hedge with things like banking, pharmaceuticals, and energy, and possibly consumer goods as well. And then the other thing is, if the number is lower than expected, that could cause stocks as a whole, especially high growth stocks, to actually rise. So just keep in mind that number coming out Thursday, the CPI, it will come out in the morning. It is a very, very important number to watch. After that, don't forget the next week we have the Fed meeting. They are meeting on the 15th and 16th, and we can expect some sort of announcement from the Fed on the 16th. Now, the real thing that we're looking for there is any sort of indication or information on possible cutting back of bond buying. The reason that's so important is once the Fed starts cutting back on their bond buying, that is going to significantly affect the stock market. The reason is the Fed at that point will be saying, yes, we see inflation's getting too hot. Yes, we're going to start raising interest rates. And the first step is to start cutting back on bond buying. And what that's going to do is that it's going to absolutely tank the stock market. At that point, that would be the first Fed action where we can actually expect a correction to full on start. We're talking 10-15% correction at that point. So keep in mind, we have two really important things coming up, one on Thursday of this week and then one next week. As far as what the stock market's going to do this week, I have absolutely no clue. I know, yes, last week I guessed pretty well, and this week I literally just don't know. It could go either way. A lot of stocks, cryptos, they're all trading flat right now. The stock market's been flat for the last few months, really. The cryptos have been really flat for the last few weeks. So I have no idea what's going to happen. We could continue going flat. We could shoot down, shoot up. I don't know. And I'm just going to go out and say it in a minute. I have no clue what's going to happen in the stock market this week. I'm just going to be watching the inflation numbers in the Fed, and I'll be along with the ride just like you guys are. All right, I've got 17 stocks to talk about today. We've got 5 cryptocurrencies to talk about today. So let's get into it. Real fast though, a quick correction from a video a few days ago. I had posted a video where I talked about mark-to-markets, and there was a little bit of confusion there, so just want to clarify something. Just because a short seller does a naked short on a stock or they do a legal synthetic short, either one, anytime they're not borrowing shares and they're shorting a stock, I talked about how they don't have to do mark-to-markets. And I want to be clear that just because they're not doing mark-to-markets does not mean that they are off the hook. They still have to cover that stock. And so this is what happened in the VW, the Volkswagen Infinity squeeze, right? Is there was a massive amount of naked short selling. Nobody was doing mark-to-markets, but they still had to cover the stock, which is why the VW stock rose to over $1,000 a share. And so don't think that just because people are doing naked shorting and they're doing synthetic share shorting and they're not doing mark-to-markets, that means they don't have to cover. They may not be getting hurt day to day, but they're still going to get hurt when they cover. So I just wanted to throw that out there and just clear that up for you guys in case you were wondering. Okay, for those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks from the top 10 YouTubers. I give you both the cliff notes from the top 10 YouTubers, as well as my analysis on their stock picks. If anything I talk about today piques your interest, make sure you listen to who I say talked about that stock, and then go watch their video to get the full details on what they said. All I ask for putting all of this together for you guys is that you hit that like button, subscribe, click the bell icon, and then click all so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. Alright, before we get into today's stock picks, I just want to remind everyone that I am not a financial advisor and none of the YouTubers I analyze are financial advisors either. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any asset. For those of you who are wondering, you are currently looking at the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. If you'd like to get 2 free stocks worth up to $1,850, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $100, Webull is going to send you 2 free stocks worth up to $1,850. Alright, let's get into today's stock picks. Alright, first up, let's talk about our cryptocurrencies. First up is ADA. This is Cardano. Cardano is up 7.36% for the month. StockMo said ADA is his second favorite crypto after Ethereum. Next up is BTC. This is Bitcoin. Bitcoin is down 37% for the month. StockMo said he does not think BTC will be the biggest cryptocurrency for long. He expects ETH to overtake BTC, and I agree. BTC has been trading flat for the past few weeks. Next up is DOGE. This is Dogecoin. Dogecoin is down 47% over the past month. StockMo said he thinks DOGE is still at the current price, given where it could go. Next up is ETH. This is Ether, which works on the Ethereum blockchain network. ETH is down 21% over the past month. StockMo thinks that if ETH drops below $2,000, then it might drop all the way down to $1,500, but he does not expect that to happen. He also reiterated that he expects ETH to be between $10,000 and $30,000 by 2025. And last we have MATIC. This is Polygon. Polygon is up 124% over the past month. Polygon is a multi-chain scaling solution for the Ethereum blockchain designed to reduce the speed and cost of the Ethereum network. StockMo loves MATIC, but it's currently trending down. StockMo said MATIC could actually grow quicker in price than ETH. StockMo likes MATIC for a long-term hold. Now let's talk about our stocks. First up is AAL. This is American Airlines. Chris Zane likes AAL as a pandemic reopening play. He has a $28 to $30 price target on AAL. $28 is where AAL was trading at pre-pandemic. Next up is AMC. This is AMC Movie Theaters. Let me turn off the EMAs so that we can talk about this stock better. Keenan Gray showed us how short sellers lost over $2 billion last week in mark-to-markets. Some people have covered their AMC short positions, but only a few. A short squeeze is just now starting to happen. Only 41 million of the total 4.5 billion in short positions has been covered, which is less than 1% of the total shares being shorted. Now obviously nobody knows exactly how many shares are being shorted right now, so Keenan Grace did a great job considering 3 different short numbers and all had amount covered at around 1%. If you want to see the different possible math scenarios, I recommend you go watch Keenan Grace's video that he uploaded Sunday. Tom Nash also appears to be a fully converted ape now. He realizes that the problem that has caused apes to get so worked up over AMC are actually a market-wide problem, and that these things, such as naked shorting, synthetic shares, failures to deliver, etc., are actually happening on many different stocks. Also, Smart Trader mentioned that a lot of people thought the short squeeze might be over because Ortex was reporting a 21% decline in short interest. However, as Smart Trader pointed out, Ortex only tracks borrowed shares that are returned. Ortex does not track actual shares being shorted. By the way, that's why it's called short interest and not short positions. We can only track how many shares are being borrowed and returned, but someone can borrow shares without actually shorting the stock. That's why it's called short interest, because borrowing shares shows an interest in shorting the stock. So how many shares have actually been shorted and covered? Nobody knows. We don't actually have a way of tracking that in the United States. It's all self-reported, and therefore the numbers aren't accurate. Now, something to point out about that 21% of shares borrowed that were returned is that the price of AMC doubled in the amount of time 21% of the shares were returned. If the price doubled when 21% of the shares were returned, then what's going to happen when the remaining 79% are returned? Also, as ZipTrader pointed out, when Volkswagen had its infinity squeeze, the official short interest was only 12.5%. However, naked shorts trying to cover pushed VW up to a price of $1,261, making it briefly the most valuable company in the world. Now, the big difference between VW and AMC is that VW had a very low retail ownership. Most of VW shares were tied up by large institutions that were unwilling to sell their shares. That left very few shares available for VW shorts to buy back. AMC, on the other hand, has about a 70% retail ownership right now. The only way AMC gets an infinity squeeze like VW saw is for a sufficiently large enough number of shares to become unavailable due to nobody being willing to sell their shares. Apes collectively would have to hold and be unwilling to sell about 350 million shares in order for an infinity squeeze to happen. And as ZipTrader pointed out, that's just not reasonable or likely, especially as retail traders who may have bought in around $60 a share start to lose money. Regardless, there is still plenty of upside potential since 79% of the shares borrowed still have not been returned. Now, taking a look at the technicals, we have a bull flag pattern shown here in yellow, which could point to another breakout to the upside later in the week. But be careful early in the week. AMC broke below the blue upward trend line after hours on Friday. That is very, very bearish and will give short sellers an opportunity to pounce. Paul and Guma thinks AMC may fall all the way back down to the $20 range and then stay there for a few months before running up into the $100 range in October or November. So with a bullish bull flag and a bearish drop below the trend line, we just don't know what AMC is going to do this week. Now, personally, I think this short squeeze is just getting started. I actually added 19 more shares right before after hours trading ended on Friday, bringing my average cost down to $43.57. Next up is AMD. This is Advanced Micro Devices, better known as AMD. StockMo likes AMD as one of the best semiconductor chip companies to buy. According to TipRanks, AMD has an average analyst price target of $108.29, which represents a 32% upside from Friday's closing price. StockMo might end up buying AMD in his YouTuber picks portfolio on Monday. Next up is ASML. This is ASML Holdings. They are another semiconductor company. ASML has been performing very well over the past few months and has strong momentum. StockMo likes ASML because it is both stable and outperforming other semiconductor companies. Next up is BNGO. This is Bionanogenomics. Chris Zane likes BNGO. It is recovering well, now down only 7% in the past 3 months. Also, the average analyst price target is $12, which represents a 74% upside from Friday's closing price. By the way, if you want to get access to TipRanks, I have a link for TipRanks in the description of this video. The consolidated information is all free. If you want the detailed information, it just costs a small monthly fee. Next up is BNTX. This is BioNTech, and they're a pharmaceutical company. Paul and Guma likes BNTX as a short-term technical trade. BNTX broke out of an ascending triangle pattern on Wednesday, which was also a 52-week high breakout, and then continued to climb higher. It's a little bit late, but Paul and Guma still sees momentum on BNTX with a price target of around $260 to $280. Next up is CHPT. This is ChargePoint. They are the largest charging station company in North America with 73% of the total market share. Keen and Grace likes CHPT because revenues increased 24% year over year, which shows strong growth. Also, quite a few large institutions opened new positions on CHPT last week. The average analyst price target is $36.37, which represents a 30% upside from Friday's closing price. Next up is CLNE. This is Clean Energy Fuel. I just wanted to let you know about CLNE because this is a stock that has been trending on Wall Street Bets lately and might go higher. Short interest isn't particularly high at around only 7%, so this isn't a short squeeze stock. Instead, this is just an overall undervalued stock. The best ranked analysts on TipRanks, that is those with 5 and 4 stars, have an average analyst price target of $26, which represents a 279% upside potential from Friday's closing price. Even if we include all analysts, we still have a $15.33 price target, which represents a nearly 65% upside from Friday's closing price. I think the best play here would actually be a leap call option. I like the January 2023 $10 call option for around $4.40. That gives you a break-even price of $14.40 and 19 months to get there. If CLNE reaches $26, you could triple your money on this play. Next up is DKNG. This is DraftKings, and they're an online sports betting company. Chris Zane gave a buy-under price on DKNG of $50 and an ideal buy-in price of $47. He also gave a $70 price target. He likes DKNG as a pandemic reopening play. Next up is GNOG. This is Golden Nugget Online Gaming. Chris Zane likes GNOG as another pandemic reopening play. He might be right in the long term, however in the short term, I disagree. First, this is an online gaming company, which should have performed well during the pandemic when brick-and-mortar casinos were shut down, but might not perform as well now that casinos are reopening. GNOG is also still in a downtrend, trading well below the 300-day EMA, with the RSI and MACD currently dropping. I would hold off on investing in GNOG right now. If you want to get this in your portfolio, I will give you an $11.40 buy-under price and a $10 ideal buy-in price. All of that said, at some point it should turn around, and Chris Zane thinks GNOG will hit $30 by October. The average analyst price target is $28, which represents a 115% upside potential from Friday's closing price. Next up is MRNA. This is Moderna. Paul Nguma likes MRNA as a short-term technical momentum play. He has a price target of between $220 and $240. As you can see, this is another 52-week high breakout. And I'll give you a bonus real fast, OTIS. I actually bought a call option on OTIS on Friday because it also is experiencing a 52-week high breakout. By the way, if you want to know everything I buy and sell, you can follow me on Facebook and Twitter. I post everything I buy and sell within minutes of making the trade. I have links to my Facebook and Twitter in the description of this video. Next up is PLTR. This is Palantir, and they're a data analytics company. PLTR is still bullish, but it is showing early signs of cooling off on the MACD. I will remind you that I expect PLTR to trade in a range of between $21 and $24 for the next few months. Chris Zane likes PLTR for a long-term hold, and I do too. Chris Zane did mention something about short interest being high on PLTR, but short interest is actually only around 5%. Also, the average analyst price target is only $20.67, which represents a 14% downside from Friday's closing price. Next up is QCOM. This is Qualcomm. Stockmo likes QCOM as another semiconductor chip company to invest in. QCOM is underperforming though compared to the other semiconductor chip companies. Next up is SENS. This is Senseonics. They're an implantable blood sugar glucose monitoring manufacturer. Keen and Grace mentioned the study that I told you about on Friday. Keen and Grace gave a $4 price target on SENS, which I think is reasonable. Next up is SQ. This is Square. Chris Zane said SQ is a volatile stock that could explode in the short term. He also likes SQ as a long-term play. Chris Zane last recommended buying SQ under $200, and I still like the $200 buy-under price. SQ is currently bearish with the RSI dropping, the MACD dropping, and the candles dropping. I will give you a buy-under price of $204 and an ideal buy-in price of $195. Next up is SWKS. This is Skyworks Solutions, and they're another semiconductor company. Stockmo loves SWKS. Stockmo said this is his favorite semiconductor company. SWKS does have momentum, but it's not as strong as some other semiconductor companies such as ASML. It is trading at quite a big discount right now, having bounced off of the 200-day EMA recently. Next up is TSM. This is TSMC, or Taiwan Semiconductor Manufacturing Company. StockMo likes TSM, especially since it's been rising over the past few weeks. TSM is not performing as well as other semiconductor stocks, and I will remind you that the traveling trader likes TSM for that reason, because it has more room to run up than the other semiconductor stocks do. And last but not least, we have WKHS. This is Workhorse. They're an American commercial EV manufacturer. WKHS has double the amount of short interest that AMC has. The short interest on WKHS is hovering at around 40 to 45%. There is only one stock in the entire market that has a higher short interest than WKHS. WKHS is also trending right now and is on the verge of a short squeeze. The chart is showing early signs of a bull run, with the 10-day and 21-day EMAs crossing for the first time since February. Fair price for WKHS is around $16, but it could temporarily run much higher if there is a short squeeze. Alright, I hope you enjoyed this video and get a lot out of it. Comment down below what your favorite stock pick is. And if you want to get some free stocks, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below, Webull's going to send you 2 free stocks worth up to $1,850. They're also going to give me 1 free stock, so it helps you out and it also helps the channel out. Finally, remember to hit that like button, subscribe, and click the bell icon if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.